an appropriate question to ask the lot sitting here. Are you looking for someone to manage your wealth? Where our next startup has got an app for that. Please welcome the founders of Tarrakki.
Hey everyone, we are a wealth tech startup by the name of Tarrakki. Before we get into talking more about the company, a few questions before we get started. Have you all heard about a company called M2P FinTech? Okay. Setu? Something common about all of this is they build infrastructure for financial services. Very similar to what we do. We build bridges. We are in the city of bridges, right? Surat. We build a bridge. This bridge is basically helping financial services companies to launch tech-first products on their platform. Just as an M2P, what they do is they issue cards. Setu provides lending APIs. What we focus on is wealth management, investment options. And that is where Tarrakki, building embedded infrastructure for investment, comes in. Quick intro about me. My name is Soumya Shah. I am one of the co-founders at Tarrakki. My background, started selling mutual funds and insurance products at the age of 18. 3 years of my undergrad, I was in HL College in Ahmedabad. 3 years of my undergrad, sold financial services products, was a top salesman for MetLife back in 2008, 2009. In 2011, moved to Mumbai, joined Tata Capital as a part of their graduate trainee program and worked with their private equity business. Post Tata Capital was a part of the investment banking team at Ireland FS and moved to the US in 2014 to pursue my MBA in finance from Fordham University. Post that, worked for Deloitte New York with their private debt, private equity advisory practice. All in all, close to 15 to 16 years of experience in financial services. My other two co-founders, one is Shaili. She leads marketing and growth. Just like me, born and raised in Ahmedabad, worked for a company called OmniLens in their treasury team. And later, she moved to the US to pursue a master's in finance and worked for a company called Essential Wealth in Dallas. And my third co-founder, Atul, who leads our technology. A tech veteran, I would say. 20 plus years of experience in software engineering and development, has built teams from 0 to 40 at his previous stints at Automation Anywhere, Global Logic. Atul leads the tech. So that's a quick intro about our team. We have two founding team members, Ram and Janil as well, who come with good financial services experience in the past. Just before we get started, just want to spend a minute on the overall background, like why are we focusing on infrastructure, especially for wealth and investing? And there are a lot of white spaces within the space. Like when you look at businesses, the easiest way to park your surplus capital from your current account is doing an FD. Or if you are a startup, again, majority of your startup owners, you generally go for fixed deposits. Is that the most optimal treasury management? So again, all of these there are a lot of gaps in the treasury space in general, being it a very manual and demand-driven process, very paper-heavy process. Other white spaces within the investment space, one which we see is teenagers. SEBI allows minors to invest in mutual funds, but no digital platforms for parents to enable a savings habit for their children. Over $87 billion of remittances happened in 2021 to NRE NRO accounts in India. Again, no digital journeys for these NRE NRO accounts to invest in the Indian growth story. So of course, these are growing problems. And to solve these growing problems, of course, we've built a complete stack of infrastructure where right from banks to neobanks to even other asset managers and investment managers can have their own wealth tech platforms in the form of APIs or a white labeled product. Just to give you a quick overview, exactly what do? We have various investment modules. What we did was we kicked off, like right now, as I mentioned, the problem statement around how no digital infrastructure around for corporates, minors, NRIs. So over the last 12 to 18 months, we've been building this infrastructure, which can be used by others in the ecosystem. So to give you some examples, we started with mutual funds, which was the first asset class. Within mutual funds, of course, we built various investment modules, all tech first. Individuals, corporates, minors, NRIs, HUFs. And we started approaching companies who focus on these specific set of target users. So essentially, we are like an a la carte suite of investment products. Based on who your end user is, you can launch a wealth or an investment offering for them. I'll be deep diving into all the use cases a little later in the coming slides. But just to quickly summarize our infrastructure stack, it starts all the way from KYC to onboarding to details about the asset class, transactions, and reconciliations. Now, if you were to build your own investment product or an investment app from scratch, you would be doing separate integrations with all of them, CAMS, Carvey, asset management companies, BSC, NSC, Morningstar, There are multiple people in the ecosystem. This entire journey can take around 18 months to set up an investment product. Versus what we do is in the form of single APIs, we give access to each and every asset management company in India, may it be HDFC, may it be Aditya Birla, may it be Edelweiss, a single API. You don't need to do 45 integrations. Single API for onboarding. So essentially what happens is it helps our partners to launch a wealth product on their platform from 18 months to all the way to 1 to 2 months, and even in a white labeled case, less than a week. To give you some ideas, like in terms of our partners, who our partners are. One of the use case, like who our partners are, right from a bank open to a Neocred, Pi Square Investments, Aceware, FamPay, SBNRI. These are names which you would have heard. These are some companies whom we are working with at this point of time to enable wealth products on their platform. The idea is to take 10 partners live in the next 12 months, garner an asset base of 1,000 crores. Deep diving into more use cases. As I said, all of our investment modules are highly customized based on who the end user is. So let's say if you're a bank open, an MSME focused neobank, what you would want is a treasury solution, not a wealth creation solution. So in the form of APIs and in the form of our infrastructure, what we do is we enable users of Bank Open to park their surplus treasuries from their current accounts to an overnight liquid debt mutual fund, which can help them earn 4 to 5% versus leaving them idle in their current account. It's a completely digital journey for businesses. Same applies for the other use case, which is, let's say, FamPay. Through FamPay, we are enabling minors to directly invest in mutual funds. So let's say when a parent gives you pocket money, instead of putting it in a gulak, I would say now the underlying asset becomes a investment product like a mutual fund. Third is SBNRI, the third use case. They use our NRI investment module. So anyone who has an NRE NRO account can have a 100% digital investment journey. Doesn't matter if you're in Dubai or if you are in Singapore. You can invest in the India growth story using your NRE NRO accounts. And I think SBNRI is one of the phenomenal partners to have a perfect NRI focused neobank. And on the last use case, we are working with several cooperative banks, PSU banks, and even asset managers like a Pi Square Investment. For them, their user base is not one person specific. Let's say they have individuals, they have minors, they have businesses. We are helping them launch wealth products we are helping them launch wealth products for all of their set of users. So as I said, the solution is a highly customizable solution. It's an a la carte. You pick and choose what product do you want and who your end user is. And based on that, you launch an investment product on your platform. This is our white labeled product. So let's take an example of a cooperative bank. Somewhere where cooperative banks struggle is on the infrastructure side, building infrastructure from scratch. That's where our white label product comes in, where the logo, Elivo, gets replaced by the bank's logo, and they are able to launch an investment product on their net banking and mobile banking. In terms of our revenue models, we have two. Channel partnership, I think very popular. Maybe we are in Surat. NJ has a whole lot of channel partners. These are individuals. For me, my channel partners are fintechs, neobanks, cooperative banks, and we enter into revenue share agreements with them. Alternatively, if they don't want to share revenues with us, we even have a licensing platform where we charge a one-time integration fee along with an annual maintenance contract and revenue per API call. So if you're onboarding a user, we charge 60 rupees per API. So of course, our monetization licensing also is heavily dependent on the growth of our users. So when we are at a larger scale, of course, revenue per API call is very crucial as well. In terms of the traction, I'm just going to take a second. Our white labeled platform itself, Elivo, saw over 100 crores of transactions which have happened in the last 12 months. We have around 26 crores of revenue generating assets. And the best part is we have some phenomenal businesses who are now using a digital product to manage their treasuries, right from Anand and Anand, Infibeam Avenues. I'm just going to skip the roadmap in the interest of time and the testimonials. I'm just going to focus on one last slide. And the best part about our journey is we have some phenomenal investors and advisors. When you look at our cap table, we have Kiran, who's the MD of Swift Asia Pacific, Asit, Yes Bank ex-COO, Infibeam Avenues Family Office, Safir Anand, who's an intellectual property lawyer. So of course, we've got some great people who are helping us in this journey. And in terms of the ask, we are raising 1.5 crores in the form of convertible note, which will be capped at 7.5 million, around 58 crores, and it's at a 15% discount. The idea is we'll be entering into our institutional round in the next 2 quarters. Just before that, we'll be issuing this on a cap convertible at $7.5 million valuation. So happy to answer questions.
I would like to know, how do you categorize the risk appetite of your clients when you are recommending investments?
So we are a very infrastructure first company. So we don't get into the advisory aspect much. So for example, if I'll take an example again, Bank Open, one of our partners, they only want treasury products on their platform. So those are all low risk, low return to manage the surplus funds of a company. Versus, let's say, some of our other partner called SBNRI, let's say they would want a high risk product. But what we do is we enable our partners to take these calls. How do they want to recommend investment products and what products do they want to build? So building the user journeys is completely up to our partners. What we do is we are the enablers on the technology side. For investments, absolutely. We want to be those enablers who are enabling, because we see a very big, up till now, financial wealth investment products were sold predominantly by wealth managers. But as fintechs and banks expand their user base and look for cross-selling opportunities, they will be adding more wealth products. And this is a good stream which can build around 5 to 8% of their top line. So yes, absolutely. Our strategy is completely B2B infra. Multiple. So we started with mutual funds, but we'll be adding more and more asset classes in the next 18 months. We do it's in the range of 50-50 to 60-40. 60-40 in the partner sphere, or a 50-50. Based on the agreements which we've signed. And at times it also depends on the size of the partner and the product. So debt heavy products, we have a slightly higher revenue share on our side, just because of the cost of onboarding and the cost of supporting, because it has lower yield. Numbers in terms of currently, we have a monthly recurring revenue of close to 1.5 lakhs. On top of that, last year we ended with 24 lakhs. And the main part is we see majority of this revenue maturing in November, December, where we are expecting an MRR of around 5 lakh rupees, where we'll get by December, because most of our partner integrations are going on right now. So as it starts maturing, those relationships will be expanding as well.
So in that case, how do you justify the valuation multiples?
The sheer pipeline of partners which we have, the distribution network which they have is phenomenal, right? And just when you look at the names, these are all not the smaller ones, right? And not only on that, we have a clear edge and advantage in terms of the investment modules also which we have. So when you look at some of our peers, they are very individual focused infrastructure which has been built. When you look at us, we built NRI infrastructure, we've built miners infrastructure. So these are clear differentiators which we have as well. So that brings the justification in terms of the pipeline, the agreements which have been signed, and the visibility which we have in terms of revenues. And one more thing I would like to add is, in all the new agreements which we are pursuing right now, we are adding a monthly retainer and a minimum business commitments as well. So that has also brought a lot of visibility into our future forecasts.
Revenue multiple, if I checked, it's still 80x. Don't you think that it's a huge?
So of course, it's 80x based on the current scenario which you look at. So when you look at the space, the team which we have and the partnerships which we have, yes, year one, it looks a little compressed. But when you look at it into year 2, year 3, and what the pipeline our partners can generate, it kind of significantly downs down.
So can you please explain on charges, how you are charging? It is a pure subscription based, or it is pay as you go?
No, it's not pure subscription based. Just a second. So we have 2 models. One is a revenue share. So you'd know, right, what NJ Wealth does. Channel partner के साथ revenue share होता है. Similarly, we do that with fintechs. We enter into revenue shares. So whatever products which get sold on their platform, we split the revenues. Second is, if they don't want to do a revenue share, we even have a licensing approach. Yeah. So to give you an example, one of our SaaS partners, we charged a $20,000 one-time integration fee. On top of that, we have a minimum threshold of 40,000 rupees a month as a retainer, which increases based on the number of users. So for the first 10,000 users, we charge them, let's say, 40,000. For the next 5,000, we are charging them 50,000. So that increases based on the number of users. And the last is revenue per API call. So if you are my partner, and if you're onboarding a user on your platform, I charge you 60 rupees to do the onboarding. If you want to use my risk assessment API, I charge you 7.5 rupees. If you're doing a fresh KYC, I charge you 110 rupees. So all of that is on per API call basis.
This is not the per API call. This is, then you can call, this is not as you go basis. Like they are not calling API every time and you are charging like Amazon too. if you call Amazon every time, they charge some cents or something. So it's per you are charging for the first request.
Yeah, it's a request which we get if
Yeah,
you want
yeah,
to onboard a
it's
user.
fast.
So when I say per API call, it's more of, let's say if you do your risk assessment 5 times, I'm earning 7.5 rupees into 5.
Yeah, yeah. So it is first request, not first API call, right?
No, it's per request.
Yeah.
So let's say, as I said, if you're doing the risk assessment 5 times in the last week, I've earned 7.5 rupees into 5.
Two parts. First, are you in lines with any stockbroker or doing anything on the stockbroking side? And second, I didn't see a competition slide. So can you enlighten me with your competitors?
Sure, absolutely. So as of now, we haven't touched direct equities. We've only started with mutual funds. In the long run, yes, from an 18-month pipeline, we are looking at equities. We are exploring that option. In terms of our peers, there's a company called FISDOM, FISDOM, who's been working with a few banks on the embedded infrastructure play. There's another Bangalore-based company called Cyberla Technologies, which provides technology for individual investing. So when you look at it from an Indian landscape, I would define these two primarily competitors who are around in the same space.
Sir, sitting in the last row.
So the three co-founders, are you full-time into this or you have any side things along with this?
Full time.
And secondly, thank you. Secondly, have you all put some money until now, because you must be spending on your team or your IT, and how big is your IT team right now?
So Atul, who's my tech co-founder, manages an engineering team of 4 engineers. We even have 2 outsourced engineers who work. We are even recruiting right now, so if anyone knows a Python or a React engineer, please let me know. But yeah, we are even recruiting and expanding our engineering team. In terms of founders' money, founders themselves have put in upwards of 75 lakhs, along with the angels.
Next question, please.
Hi. Yeah. Okay. So you said your revenue is under 2 lakhs per month, right?
Recurring, yes,
Recurring.
not counting the one-time integration licensing fees.
So what is that? One time integrating?
So in this phase, like let's say if I have a new partner, I charge my partner a $20,000, 15 lakh rupee licensing fee.
That is valid for 1 year?
It's a lifetime. It's a one-time
Lifetime.
integration
One-time
fee kind of a
integration.
thing. So if I don't count that in terms of just the trail commissions which we get right now, that's the number.
Because as you said, NJ, so even a small partner of NJ earns more than that per month.
Yeah, that doesn't matter, right? We are building technology. Like I'm not saying that I'm a ready product and I'm the best.
How long have
So-
you been into this?
We started building the infrastructure play around 14 months back, 14 to 16
And your
months.
first revenue came when?
My first revenue came this year in February, which was in the form of licensing.
Licensing.
Thank you so much, sir.